Oh, I'm here today with Gary from the mortgage brokerage. I'm Nigel Fitzackley from NGU Homes, and we're just going to do a quick update on the Bank of England decision. So obviously, the Bank of England are meeting today to decide whether to cut interest rates from 5% to 4.75%, which has a big influence on the property market in the UK. And so we're here just to discuss that as we go into that meeting at 12 o'clock today. So just to explain who we are, I'm Nigel Fitzackley. I own a letting agent and estate agent in the northeast of England. And I'm predominantly going to talk about how this will affect northeast property prices. So where are we on northeast property prices? At the moment, Halifax has just announced that property prices have hit an all-time high in the UK. So we're above the peak, which was set in around summer 2022, I think, or it might be in 2023. But we're above that peak. So house prices are chugging along quite nicely. They're up around 5% in the northeast of England, about 2 to 3% in the UK itself. And realistically, the northeast of England is performing. It's one of the better performing areas in the country, just to do with affordability. You can still get house prices for £100,000. You get rents on that for £700 to £800. The yields are typically over 10%. So it's a very good region to invest in. And so with interest rates being cut, you'd expect that to give a boost to the property market. And we should see house prices continue to chug along. My feeling is as interest rates come down from where they are at 5%, hopefully to a terminal rate 3.5%, some are saying 2.75%, we'll see a 30-40% move in the northeast, just because the affordability is there, debt's being cut by 40%. And what that'll mean is that'll have a roll-on effect in terms of house prices. So anyway, I'm not the expert on mortgages. I'm here with Gary from the mortgage brokerage. He's going to give you an update on the mortgage market because he's got his finger to the pulse and he knows where we are at the moment in the mortgage market. So where are we, Gary? Give us an update.
Yeah, so where we are today is basically we're all hoping for the base rate cut at 0.25%. However, that is not to say all lenders are going to follow suit immediately, because what we've seen in the last couple of days, Nigel, is lenders have actually been pulling rates and actually increasing them slightly with very little notice. Now, we believe that's just because the market's a little bit volatile at this moment in time. We've had the budget, we've had an unexpected increase in stamp duty for those owning a second property or investors. We've also had swap rates where the lenders actually buy the money and get the money from, increase slightly. And we've also got potential stubbornness of Donald Trump in his negotiations with the trade globally, which may have a slight ripple effect. However, and we've also seen some of the mainly financial experts now predicting that there may be only 2 base rate cuts in 2025, rather than the quarterly cut many were expecting. And we're all hoping that the base rate might be sitting at potentially 3% by the end of 2025. That may be a little bit premature. However, we might see something happening once the base rate hopefully cuts today. Lenders get stopped to what's happening in the markets over the next week or two. They realise that yes, the 2% stamp duty is going to have a sort of impact on the second homeowners, the investors, but maybe we'll just move forward and things start to progress, and we'll basically look at the positives, like you said, about house prices increasing and interest rates dropping and all that. So yeah, I think we've had a good 2024 considering some of the obstacles, and I think 2025 is going to be a good year again for investors and those who buy properties at the right price, Nigel.
Yeah, me too. I mean, I think it's been a tough old year, interest rates, people forget that interest rates only stopped rising in August 2024, was it?
Yeah.
August 2024.
Yeah.
We've only had a relative bit of stability stroke interest rates being cut. And in the back of all that, we've like this massive squeeze from 0% to 5%. We've seen house prices go up 5%. That is a good return in probably one of the most difficult markets you'll see. So you're never going to see interest rates effectively go up 500% in an 18-month.
Oh, I think that's what realistically for the last 2 years, really, since the trust got crash of the budget, the speed of the increases with the sort of lender, the rates and everything, the stress tests for landlords and how to get the calculations and how they can either refinance the portfolio or create a portfolio, it's been very, very difficult. And as you know, I specialise in buy-to-let. You are a landlord and you run a letting business. Landlords have been hit hard these last 2 years, and they've got to work with a specialist broker to help them either restructure their portfolio or give them guidance how they can make money from their portfolio, which was basically a nest egg of like all the sort of retirement funds, what potentially isn't working for them, Nigel, this last 12, 18 months, and a lot of them, as you know yourself, are potentially throwing the towel in a little bit and saying, right, I've had enough, I'm going to get rid of my portfolio. But I think working with somebody who knows what they're doing and putting that plan and going resetting their structure and the plan, there can still be money to be made on top of it, and especially if prices are going to go up nationally over the next 5 years at 23.4%, in the northeast they're expecting 28.2%, then it's still a good time for investors who are in it for the medium to long term, and the professional investors, the professional landlords who want to basically create wealth from property.
Yeah, oh no, definitely. I'm sorry, Gary, I was just keeping an eye on.
Just keep an eye on it, yeah,
This
to see what it's doing.
coming in
Well,
now.
yes, has it done it? No.
I don't know yet. I'm just waiting for the feeds to update.
But I do think, Nigel,
4.75, Gary.
24.75.
Yeah, Bank of England for a second time this year, as the City expected and predicted, the Bank of England monetary policy have voted to lower interest rates by 0.25% from 5% to 4.75. So we've gone from 5.25 now to 4.75. That's a 10% move in the cost of finance. So we're on it. We're on the cut cycle. This is the big thing. And I've been saying,
yeah, definitely, it's a positive, Nigel, going into 2025 as well.
and to be honest, I've been saying this to you, Gary. People, it's weird property. I've been in property now since 2007. So I've been in property for 17 years.
Yeah.
And people, I think it's a FOMO factor, fear of missing out. So people start wanting to get involved in property once they see the house prices really start taking off. So you see house prices go up 10, 15, 20%. Oh my God, I've got to get involved in property. It's now. The stars are aligning, the interest rates are getting cut. It's now. If you're going to move, go now. There's very few reasons, why you wouldn't move. You're getting a 10% yield in the northeast. Interest rates are getting cut. Rents are sky high. There's still some give to go on rents in the northeast. We manage over 700 properties. I thought they were going to start like leveling out. There's still some more movement in that piece.
Well, there's a lot of movement. And like you say, Nigel, people, they hear the property prices going up 10, 20%, they want a piece of that pie. It's the wrong time to buy. It's now, like you say, when interest rates are a little bit higher now, you've got less people looking to buy because they're looking at this sort of, oh, it's going to cost us this, cost us that. For the savvy investors, this is the time to buy because there's not as many people investing at this moment in time. You could potentially get a good deal, and there's potential growth, like you say, if all the professionals and all the experts are expecting a 23.4% return in the next 5 years, that's fantastic. And bear in mind, you're getting a return on the actual property price, not the money you're putting in. So generally speaking, you're putting 25% deposit in. So on a £100,000 property, you're putting 25k in, you're getting a return on £100,000, not a £25,000. Yes, it's hard work to be done. Yes, you've got some niggles and some headaches sometimes along the way, but if you manage it properly, you're getting a fantastic return on the investment, the asset, rather than your initial investment. Where else can you make money like that?
Well, I mean, just on that point, just to explain that point, what Gary said, because it's a really important point. You buy a house for 100 grand, you put a 25% deposit in. Your cash at risk is £25,000.
Yeah.
That house price goes up 25% over the next 3 to 4 years. Savills predicted it's going to go up 28.2% next 5 years. Northeast, one of the highest growing regions in the UK. Interest rates are getting cut into the base of that. Rents are sky high. That goes up from 100 grand to 125 grand. You've doubled your money. You're in the casino and you've doubled your money in the next 3 to 4 years. Investing in property, there's an element of risk, there's an element of gambling, yeah? For me, it's a decent sized risk to double your money, given the fact interest rates are getting cut.
Yeah.
Now, there's a lack of building in the UK. Immigration and population growth is going up.
The house shortage, there's a house shortage, it's, everybody knows it. Good rental property, there's a shortage of good rental properties, Nigel. The councils don't provide good rental properties. So it's down to people like ourselves to basically build portfolios, provide good housing for people who can't get on the property ladder and just want to rent, but they want to rent in a nice area, or they want to live in a nice property, know that work's going to get done on that property, and it's going to be nice. And at the same time, us investors get a return on our money over the medium to long term. Yes, it's not guaranteed, but historically, it tells you get a good return on your money.
I've got one final point. I was just waiting for this, Gary, actually. So, split. So the split in the Bank of England is who's voted to cut. There's 9 members of the Bank of England, and basically all of them get a vote, yeah?
Yeah.
So asking for you, I'm going to give you the information now, Gary, and I just wanted your thoughts in terms of the mortgage market, yeah? And in terms of this December cut, are we game on for the December cut? So I'm going to give you, let you do your thoughts. You probably know what my thoughts will be.
Yeah.
Right, okay. So the split was, in terms of cut, 8 to 1. So 8 people voted for a cut. Only one person voted to keep interest rates as they were at 5%. So there was quite a lot of people voting for that cut. Yeah. So that means, for me, December cuts on. You know, December cuts on. We've got 2 inflation figures coming up. December cuts bang on coming on here. So where do you think what we're going to see in the mortgage market? We're going to see any changes? Or do you think
with that, sorry, with the positivity of that, and let me see it, with all the forecasts, even back June, July, we're expecting 2 cuts. Maybe we're expecting one in October and December. That got pushed back because of the budget. So we're seeing November. The fact you're seeing that the actual board was so positive, it's been because it was really tight over these last few months as well. Then fingers crossed, there's a cut in December, and I think over the next few weeks we'll see lenders basically look at it and start repricing. They're coming to the end of 2024. A lot of them have done well. We've had a really good buy in 2024, even though it's been difficult. They need to get their business in sorted. They've got their targets themselves to hit for 2025. So I think we will start seeing resetting of pricing in the mortgage market going into 2025. A lot more positive. Hopefully, rates on the buy-to-lets and the fees, the lender fees will come down. So again, it's an opportunity for landlords and investors to create wealth through their portfolio, start looking at the portfolio, put a right structure, speak to the broker, and this could be a good opportunity to make money again, Nigel, and just expand or refinance the portfolio, what's not making them money, just for it to start making money again for them and do as it was supposed to do when they initially bought that portfolio. So yes, all positive going into 2025.
Brilliant. Well, Gary, I'm going to let you get your lunch. 4.75, we're on. We're in the second cut. If you're thinking of buying, get yourself on Rightmove. Get yourself looking at properties, yeah? Get those purchases in, yeah? Because house prices are going to move. We're going to continue to cut, yeah? So get yourself involved. And if you need a mortgage, come to Gary, obviously. We're going to leave our... in the comments, Gary's just going to leave his details so you can contact him directly. I'll leave my website. I'm happy for anyone to contact me, but I'm totally cool either way. And yeah, good luck to everyone. Fantastic for the landlords out there. We've got a cut, and may this be the beginning of more. Okay, thank you, Gary.